All right, so let's talk about it. Maybe you're someone that says, I have $1,000 and I'm looking to start trading at sometime in the near future. Or maybe you're ready to start right now and you've learned the concepts. Now, when I speak on the concepts, I mean understanding purely market structure as a whole. Okay, because that is the most important concept to actually trading, is figuring out which way to actually trade. Understand that. So I'm going to show you towards the end of the video using a simple spreadsheet on basically a 4% and 3% rule that I have. That means profiting 4% on the day with a maximum stop loss amount of 3%, that you possibly want to leverage in the market. I mean, I'm only interested in leveraging no more than 3% of my account size. Now, in doing so, I'm going to show you how you can grow $1,000 over a 6-month period. So maybe you're someone that says, I'm going to give myself 6 months and you're entertaining the interest of maybe moving or shifting over, or, resigning or quitting your job. And now you want to start trading futures, because you really may become very great at doing so in 6 months if you can prove consistently that you can grow an account, right? So I always tell people, is it possible to learn how to trade in 30 days, 90 days, 6 months? It is, but everybody's path is going to be different. Okay, 6 months is really a good test to see if you can really grow an account. Okay, and in today's time, you can trade with $1,000, trading purely the micros. All right, again, using that 4%, 3% rule. Okay, you can definitely do it. Now, I want to say this. This can be life-changing for anyone, for you, for your family, if you understand the correct way of trading supply and demand, because that's how I do it. Now, I trade using range-based charts. I'm going to show you an example of the strategy, okay, in a sense, all right, roughly going through it. But if you spend time watching the videos, you will start to see, and it will come together, hopefully, that the strategy is not complex. It's very simplistic, because I'm just using two charts, which is I like to call multi-chart confluence. I'm looking up marking up two zones, a higher base chart zone and a lower base chart zone. And that lower base chart zone must be on the inside of the higher base chart zone. Okay. You're saying, what does that mean? Well, if we're trading supply and demand, say for example, like right here to the upside, and the market was making higher highs and higher lows from last week into yesterday's trading session. Okay. Highs, higher lows, breaking structure. Okay. It's a beautiful area of demand right here, right? Broke above these highs. Aggressive buying. That's what demand is. Okay. If the market immediately came back to this area, I'm going to mark up this zone. I'm going to wait for it to tap the zone there. I'm going to move down to my lower base chart and see if I can find a smaller zone. What do you mean by that? Well, a 24 range, which is my entry chart zone on the inside. So I'm looking for high probability zone setups, where we have a gap or imbalance resting back at the zone. Okay. So there's a gap on this candle here, back down to the zone. I'm going to go ahead and mark this up because the market broke structure to the upside. As long as we're bullish, we're looking for demand setups. If we're bearish, we're looking for supply setups. Okay. Supply is aggressive selling, and we're looking for the market to pull back to a key area of supply. In this case here, if it breaks structure to the upside, pull back, key area of demand, I'm going to then shift and move down to my lower base chart to find a smaller zone that's going to give me more confluence to take a trade from out of this larger zone. Okay. All that does is redefine and help us get into a more precise entry point. All right. So take a look here. As you can see, the market was making higher highs and higher lows to the upside. Correct. Okay. It finally comes back. Now, in this case here, I always talk about taking trades in the direction of the higher base chart. Yes, that is true. For beginners, I would recommend whatever you do, try to trade only in the direction of what's going on the higher base chart until you get skillful and maybe understand how to trade a counter trend. Because this right here, by the time it came back to it, we had went from bullish to bearish. So this is a counter trend setup. Okay. But it's still valid. Okay. Setup to take. Even though it is a counter trend setup, because it's a high probability setup as well, because we have an imbalance resting back at this high probability demand zone. Again, pay attention, because towards the end of the video, I'm going to show you an example of taking $1,000 and growing it by 4% of the day, where it can end up at in 6 months if you do it the correct way. All right. And yes, this is if, just say, hypothetically speaking, we were able to compound 4% or make 4% on the day without any losses, right? Of course, you may have a couple some losses along the way, or maybe breaking even along the way where you didn't make maybe came out flat on the day, zero. But I'm just showing you that if you were capable of growing or compounding just 4%, that's all, 4% on the day, that's all you need, okay, where it can actually grow to on a daily basis. And Maybe you're someone that says, well, I really don't need 4%. I just want to get 2%. Okay, that's fine too. All right. I can shift this up and show you 2% where you would end up at, which would be basically just half the amount that you're going to see towards the end. All right. So with all that said, I want to say this to anyone out there who's interested in joining our Discord community. Guys, it is free. The link is down in the description portion of the video. If you're someone that wants more insight, after you say, hey, I want more detail, I want to get a little bit more involved into the strategy, understanding the trade setups like that I take, I post my trade setups over on our Discord community. It's free. Now, what I'll do at the end of each session is that I'll go back sometime throughout the day and I will make a private video for the elite channel supporters. That's where the trade breakdowns are. That's where the gold nuggets, the meat and potatoes, the whole full-on mindset of the way that I actually trade in regards to the setups I took for that day and each day, because there's tons of trade breakdown videos already available to those that are the elite channel supporters. And I want to say thank you for everyone that does support my efforts as a trader and content creator as well. Thank you for doing so. Now, the link for that is down in the description portion of the video as well, right below the Discord. It says Elite Channel Supporter. You click on it, two tiers are going to pop up. Make sure to choose one for $6.99. I'm not guaranteeing, I can't guarantee anyone anything. You have to back test and forward test the strategy for yourself. Most of the video content here on this channel is where I'm breaking down the strategy. Why? Because I want to see people become successful. And if you're very passionate, as I am, about trading, in time you will. We have a great team, or I should say community of members that are part of our Discord. Some are still there. Some have gone. Some have, found success with the strategy and are on their way. Some are still learning. Okay. Some are still with us and that are profitable and making money using the same or similar strategy. So, and you can take the strategy yourself and twist it, and maybe instead of trading 120 range and using a 24 range chart to make your take your entries off of, you can maybe choose some other charts. Maybe you say, hey, I'm used to trading time-based charts. I want to use maybe a 60 and 5 minutes. Now I will say this: I don't know any of charts from a range side that are comparable to time-based charts, because time and range charts are, they're not comparable in a sense. What I'm trying to say is that they're calculated differently. So when people ask me the question, what chart can I trade? What chart is comparable when it comes to time-based charts that's comparable to what you trade like on a range-based? There are none. Okay, I'll say that now. You just kind of have to find your little mid-ground if you want to yourself. But again, the link is down below for anyone that wants to join. I mean, I know a lot of people spend more than $6.99 on a daily basis on the price of a cup of coffee or something that they may purchase, breakfast sandwich, lunch sandwich, whatever it may be, which adds up, on the end of the week. I'm talking about something that could be game changing for you and yourself and change possibly even your life for $6.99 a month. That's all it is. And if it doesn't work out for you, again, I can't make any promises or guarantees to anyone, but it's very inexpensive. And, if it doesn't work out, then, you just kind of, move on and find something else that does. I know, because I know people go from one thing to the next and they kind of get confused and they start learning all this stuff and trying to bring it together. I'm telling you, sometimes you got to scratch all that to learn something new to see if it's going to work out. And I'm not here to toot my own horn or anything. I would say join the Discord, ask some of the members, how it's been working for them, and maybe that'll help you make your decision. But again, it's only $6.99. The link is down in the description for anyone that's interested. I want to show you just an example right quick. And before I do, let's just talk about the price action for today. The market was making these higher highs and higher lows last week, dipped down yesterday, went from bullish to bearish. And then today, overnight when the market closed yesterday, or prior to it close, we broke structure to the upside, right? Okay, we broke higher, but we're in a bit of a wedge here because we're in between this high and this low right here. So the high was from yesterday that it made. The low right here, minor areas of structure, has broken those to the upside on this push up yesterday towards the close of yesterday's trading session, and then we got a pullback right here. So we're moving sideways. This is kind of quote unquote dangerous territory in a sense, unless you know how to trade it correctly. There's still opportunity. I would have definitely traded off this zone right here. This is a very, very nice demand zone right here. Why? We broke structure higher. Yes, we are moving sideways here, but we did break some structure back to the upside, okay, that left behind this valid demand zone. And it's a high probability zone as well because there's an imbalance resting right back at the zone. A very small gap at the zone. It comes back to the zone, and we're going to break this down to the lower base chart. So, again, the strategy works like this. look for an opportunity to take a trade either at a supply or demand zone. The market pushed up here. It broke an area of structure back to the upside, coming off this leg to the downside. So this is a minor structure break above this area right here. All right, so it pushes up and breaks above this area here. So we'll go ahead and mark the zone on the higher base chart to start with. That's what you want to start with. Make sure it breaks structure. Make sure it's pushing, has pushed to the upside and taking out this area here, high, breaking structure. Aggressive buying, demand, mark your zone up, okay? And then at this point, what I'll do is I'll move down to my lower base chart. I'll move down to the 24 range chart, okay? And this is that high that it just came off of right here. As it's retracing back to my zone, which is that larger base rectangle box right there, I'm going to start eyeing and looking inside the zone to see is there a valid supply area, not supply, sorry, demand zone that I can take a trade from where there's a breaker structure as well. Well, right here, pushed up, pull back, the market broke structure higher, aggressive buying to the upside, and there's a small swing right here, okay, that's the demand zone right there with the market broke structure above this area. So now I got two higher probability zones, the 120 range demand zone and the 24 range demand zone. Multi-chart confluence gives me the confirmation. The market taps the 120, taps the 24R, slightly with the wick of it, breaks right below it, but not breaking close. So this to me is still a valid zone to trade from, because all it's doing is grabbing a small little low below this area, which is just slightly grabbing liquidity, and it pushes back to the upside. That's what I'm looking for. At this point here, I'm looking for, when we get to rejection, I'm either going to get in aggressive at the breaking, but at the close of the first bullish candle at 124, or you can wait to get in somewhere around here, maybe 128, 130, the breaking close of the candle to go long. Stop goes at the back end of the area the market rejects from off the 24 range chart, okay? All right, and then you just aim for possibly gaps in between candles, gaps back up to the upside, and possibly the market to take out some area of liquidity resting above. Now, if we look at the higher base chart, here's the area down here. I would look for the market to come up and at least test this area right here, back up to about 155 area, okay? All right, so let's say you got in, I believe I said down here at the 120, let's say 130, back up to 155 or 150. You can pick yourself up very easy 20 points right there, okay? Very easy. So all we're doing is identifying a higher base zone first, following, in the direction of the market, broke structure here, pull back, valid area because all this aggressive buying, wait for it to patiently come back to the zone you got marked up off your higher base chart, move down to your 24 or your lower or whatever lower base chart you're trading from, and look for a smaller demand zone on the inside of the larger zone, wait for the rejection, and then take your shot going long. That's all it is. It's very simplistic. It is not complex. Now, talking about, so let's look at this. If we have $1,000, again, this is not going to be 100%, how should I say it, correct in all instances, because we all know that, there could be losses that come about from time to time. So, but what I'm trying to say is that 4% return or gains on the day versus, only leveraging 3% of your account. Now, let's say you're someone that's consistently profitable each and every day, and you can make 4% gain. So what you're doing is you're leveraging 4% of your account size when you place trades every day. So let's say you have $1,000 to start with. Again, the micros, okay? Again, all right, and you can do so with $1,000 with a target of just making your first trade $40 on a day. All right, so $1,000, you made a profit on 4%, which is $40. It adds to be $1,040. The next day, you have looking to make 4% on the $1,040, and that's only $41.60. Add that to the $10.40. That's going to give you $10.80.60. Then the next day, all right, so basically the third day, you're looking to make another 4% on the $10,081.60. That should be $43.26 that you're looking to make for the day, 4% on this amount here. And you just do that each and every day. It starts off to where you're just making small amounts, which is no more than 4% on your account size each and every day. Okay. And again, hypothetically, this is just if you didn't incur any losses and the max loss of only 3% size of your account. But let's say someone that you were like 100% perfect, and we know that's not going to be in all instances, but this is an example of how you can grow an account using the 4 to 4 and 3% rule, 4% gains, compounding daily, and 3%, max loss. All right. As you can see in time, you went from $1,000, and let's say by the time of the next very month, which would be March 19th with next month, now you're up trading micros where you started with $1,000 on compounding 4% on the day. And now the next month, you're somewhere sitting around about $3,000. Okay. And then let's say a month out from March, which would be April, you would be sitting around about $10,000, because then it starts to really pick up, because now you're like a few $1,000s into profit in your account. And now you're making 4% off of that. You're looking to make, only risking 4%. Well, excuse me, not risking. You're only risking 3% of your account, but you're looking to profit 4% each and every day in gains. Okay. And then it starts to pick up from where you're just making $40, a day, picking up from there. And now you're making a couple $100 a day. All right. So by the time you get to April, about this time in April, you're around about $10,000. All right. And then the next month, that's when it really starts compounding even more, because as the account size continues to grow and you're capitalizing or compounding on 4% daily, you can see what the amount should be that you're looking to profit on each and every day based on 4% of the account size. And as you continue to do that, the very next month, say May, all right, now you done went from 10,000 to 32,000. I'm just showing you in time, and if you can consistently do that, where you're looking to profit 4% on the day with a max loss of only 3%, your account size will continue to grow over 6 months and put you in a very, very, very good condition. Okay, understand that. It's kind of the same principle of what I guess prop firm traders, or those that trade, props, they're looking to profit a certain percentage amount each day to grow their account. Because I believe anyone that's just trying to pass those evaluations or challenges, and they're looking to compound based on a certain percent amount each and every day, the goal should be, of course, to make money doing so and build an account of that way, but to take money and withdraw it and to put it into your own personal account. I'll say that again. If you are trading these prop firm, fund accounts, look to withdraw and put into your personal account, or put it away to savings so you can set up your own brokerage account eventually. But this is a very, very good way to grow just a very small amount of $1,000 for anyone that's interested in trading the micros. It is very, very possible to do so. So I just wanted to share that with you guys today. Anyone that's out there that's looking for a supply or demand strategy, something that could be life changing for you and your family, in which you can, start to take a very minimal amount of money, $1,000, trade the micros, and watch it grow. It's definitely possible. I'm telling you right now. But that's all I want to do was share that with you. I would spend some time watching the video content, because that's where you're really going to start to, and get a pen and pad. Take notes. And I say notes, rewatch and watch videos over and over, because you'll, and watch. There's a lot of videos on the channel, but spend some time definitely going through it. I'm not just saying 5 hours or 10 hours. Guys, I spent hundreds of hours, recording these videos. Okay. All right. And not just that, but spent that much time also studying. And I'm always in continuous learning mode all the time, because this stuff, the markets are a evolving creature, and they're always changing, and the markets don't ever look the same every single day. Even though the setups, what we're looking for, they're pretty much the same, because it's all just trading supply and demand. But in reference to how it may pan out to where you may take a trade from, it could look a little different. But that's all surrounding price action as well. But that's all I have, guys. I appreciate each and every one of you tuning in and watching the videos. Of course, if you are a first-time viewer on the channel, okay, please take the time to go ahead and subscribe by clicking on the sub button down below. Make sure to turn your post notifications on so you do not miss any of the uploaded content. You want to get the video content, guys. That's where it's going. This is what's going to help you, okay? And outside of that, if you can do me the biggest favor, drop a like, click that thumbs up button right now before you click off of the video today. If you found interest and you believe this is going to be something that's going to help you, or you're someone that's part of the community already, and you guys already know I cover this type of content because I want to see people become successful just as well. So this is the reason why I drop these videos pretty much each and every day. But that's all. If you found value in today's video content, make sure to click that thumbs up button. Again, the Discord is down in the description portion of the video, as well as to become an elite channel supporter. Take care. See everyone in the next one.